Welcome. In our third Global Leader Impact Forum, I again have the privilege of being your host. My name is Nosa Egwai. I am a speaker, medical industry rising leader at Baxter International, and founder of the Prolific Company, a firm committed to providing solutions for the athlete transitioning from sport. I'm involved with the Leader Impact group that meets every Wednesday in downtown Chicago, led by Jim Johannick. The goal in providing these forums is to help us leaders grow personally, professionally, and spiritually, and become leaders of impact. We want to create opportunities for your leadership and your influence to grow to the next level. We've done our job if you come out of our time today with tangible takeaways on how to increase, come out of our time today with tangible takeaways on how to increase your leadership capacity and effectiveness. To this end, we want to invite you to consider joining a Leader Impact group in your city, region, or country. We will provide more information on how to do this later on. If this is the first time attending a Leader Impact Forum, we want to give you a special welcome. Leader Impact is a global movement of leaders dedicated to having a lasting impact. As I said before, we believe that true impact occurs when a leader's personal, professional, and spiritual life is fully engaged. We have a network in over 350 cities around the globe. Many of those cities are represented on this webinar today. We host events like this throughout the year and have a growing network of peer groups that meet weekly across these cities. Unlike our last global forum, we will not be hosting a follow-up session in the coming weeks. Instead, we will be offering you the ability to submit questions to our speaker using the Q&A button on your screen. Towards the end of our time, our speaker will be able to answer a few of the questions you submit. Feel free to ask our speaker questions that pertain to his presentation on the economy, or even in the areas of his personal or spiritual life. We're looking forward to digging a bit deeper in areas that you, our listeners, are interested in learning. As always, feel free to use the chat box to comment on aspects of the presentation at any time. Today's forum topic is the economy and COVID-19, a bottomless pit, presented by Peter Hall. Peter has decades of experience in domestic and international economic analysis and forecasting. He serves as Vice President and Chief Economist for Export Development Canada, EDC, and is responsible for overseeing economic and political risk analysis at EDC and the company's research center. Peter is a featured speaker at conferences, international roundtables, and policy fora, and regularly appears in television, radio, print media, commenting on the world economy and Canadian international trade issues. I'm sure you'll agree that COVID-19 has impacted the global economy like few other events in history. It has upended lives and livelihoods with a force and a global reach that is hard to fathom. What does the future of the global economy look like? Where does faith come into our life response to this event? We know that in times of discomfort, leadership either rises or falls. May we rise. As believers, may we never forget where our hope comes from. Peter, welcome to the Global Leader Impact Forum.
Thank you very much, Nosa, and I really do appreciate those kind words and the warm welcome to be here with you today. And for my part, I want to welcome everybody who has joined us as well. And I sure hope that you find this time that we spend together very useful to you and encouraging at a time when there is so much discouragement that is not just floating around, but it's very present with us on a day-to-day basis as we go through this COVID-19 period. I am just warmed also to see where all of our delegates today are coming from. I represent Export Development Canada, and we are operating in well over 200 countries around the world. And as I see these countries flashing by, as you're indicating where you are from, I have certainly been to many of your home countries. We have opened offices up in many of these home countries. We have a main office in Singapore, but we also have operations in New Delhi and in Mumbai. I've seen Bangladesh show up as well in the comments there, and we've done business there. South Africa, all parts of Africa. I've seen people from Ghana, Nigeria, Kenya, and Cote d'Ivoire. It's wonderful just to see the array of you that are with us. We are all leaders in various areas of life. And of course, what do people do with leaders when something like COVID-19 happens? Well, they turn to leaders and they say, what do you see and how are you going to help us manage through this? How are you going to help us get through this? Are we political leaders? They're looking to us to navigate through this probably like never before. Business leaders are being looked to not just for business acumen, not just for foresight in all things that are happening right now, but also to be examples on the moral front as well. Will we hold to our principles at a time like this? They're looking to folks like me, showing leadership in the analytical world as well. So from a broad array of disciplines or responsibilities, we are being looked to as leaders to guide through a time like this. And I must say that before I even launch into the basics of my economic presentation, let's just make one thing very clear here. I have never lived through anything remotely like what we are going through in COVID-19, and neither have I studied anything like this in all the work that I did in my academics. No case that has ever been put before economists or business analysts matches this for the speed with which it has occurred and the depth to which we have fallen as a global economy. There is no economy, there is no region, there is no industry that is untouched by what is going on right now. The pervasiveness of what we are seeing at the moment is really incalculable. And of course, there has been a tremendous amount of difficulty wrapping our minds around what it all means. And so to put that in context, I'm giving presentations all the time like this on the situation itself and how we actually see it. And so I have probably quite inappropriately termed my slides, and I'm going to turn to my slides right now. I'm going to share those with you and just get into presentation mode here. I've termed our question that is before us today, is the global outlook really a bottomless pit? And why would I say something as hopeless as that inside of a presentation? Well, it sure feels like a bottomless pit. I don't know if you've ever had the experience of riding on a roller coaster, but you know, when anybody goes through the ups and downs of a roller coaster, why is it that we get a thrill out of a ride, especially when it is going down? Well, we should be able to rationally know that that roller coaster is riding on rails, and those rails are going to bend at the bottom in a way that catches us, so we're not actually going to plunge to our death. But something happens to our brains when we go into that downward trajectory. Even though we know we are going to be caught, Psychologically, we are fooled into thinking that's not going to happen. And so then that's why we lose it. That's why the thrill of the ride is there, because psychologically our brain is fooled into thinking that there is no bottom here. We might go into free fall. Well, if that's true for a physical ride like a roller coaster, just imagine how people feel about the economy. There are no physical rails there. So when we start going into a downturn mode, even though we've been through downturns many times before, and even although there are automatic equilibrium mechanisms that catch us and restore us to some level of activity, when we are plunging downward, everybody feels, no matter how astute they are, everybody feels like this is never going to end. What is going to catch us at the bottom? And so we're always looking to somebody to actually do that for us. Well, how do we then explain to business audiences what the dynamic of something like this is? Well, we've dug into past virus cases so that we are being very clear about analyzing past situations that are very similar to the current situation that we are dealing with. So we looked back to the Zika virus, H1N1, SARS, we also looked at. We can even go back as far as the Spanish flu pandemic in 1918 and 1919. There's a vast body of literature on that. So we can actually appeal to that to see what happens. Here's generally what occurs. So I'm going to play professor for a few minutes here and take you back to a time in your life that you probably don't appreciate to illustrate what we believe is going on. So on the right-hand side, on the left-hand side, I've got GDP, and along the bottom, we have time. And the blue line illustrates exactly where we were as we were going into this. The world economy was actually doing reasonably well. After the worries about trade policy that we experienced last year, December 9th, the week of December 9th of 2019 was a great week, especially for me, because I had been predicting that we were going to see trade resolution on a number of fronts before the end of the year. Well, I got an early Christmas gift on the week of December 9th because all three of the major trade disputes that we were worried about were resolved or partially resolved inside of that week. What did we see happen there? Well, we saw the signing of the North American Free Trade deal, the USMCA, or as we call it here in Canada, the CUSMA deal. So we saw the signing of that. Secondly, we saw the stage one agreement between China and the United States. Nobody thought that was remotely possible, given how President Trump was actually talking about things. And they got a deal signed inside of that week. Well, that was a tremendous development. The third development was that on December 12th, after years of complete polarization, division right down the middle of the UK economy and politics, the most conclusive event to that day or to that time in the Brexit debacle was the election of Boris Johnson with a resounding majority. That was the first conclusive thing that had really happened since the first referendum, the divisive referendum in 2016 actually occurred. So I was feeling pretty good about things on three fronts there. And then the data started to improve. So it looked like we were going to have a very good 2020. And all of a sudden, along came something like this. You know, this is the plunge that happened when the lockdown started to occur with COVID-19. And as we were on the downward trajectory, of course, everybody was losing it. And they still are to some extent. We are still in this phase of things. But as we analyze other viruses in the past, well, there is always a resolution. And it doesn't require a vaccine. It doesn't require a cure. These are all events that have happened before. And when we actually take measures to arrest the spread of these pandemics, this is what happens. The economy usually comes back very, very quickly. And at some point in time, we actually get back to the previous level of activity. Well, here's a question that our analysts had to deal with. If we get back to the previous level of activity, we haven't solved all of our problems because this area underneath the curve here is completely lost. We never recover it. Now, there are some parts of the economy that we will never recover. There will be restaurant meals that were never eaten. vacations that didn't get taken, hotel rooms that were vacant at the time. You cannot restore the occupancy there. Sports games that will never be played, and so on and so forth. There's a lot of what we would call deadweight loss. But over this period of time here, there are many people who are still earning an income. And as they're earning that income, well, they're not spending it on all of these things. They're not spending it on their commute. They're not spending it on going to a show or a concert or anything like that. All these list of things that they were not doing are things that force them to save. So that money's piling up in the bank account. We're actually getting an accounting of how much money is rising inside of bank accounts. And it's a substantial portion of people's overall holdings of savings that they've been making through their lifetimes. Well, what happens when the economy actually comes back? Well, we don't just get to level, but we actually go over that level. And we make up some of that activity. Now, this graph is not to scale. It looks like, these two portions here are equal. They're not. We don't recover everything. But this is the part that nobody's really expecting to occur. Well, what are the two questions that really need to be answered inside of this? First of all, what is the depth to which we drop inside of all of this? And what is the duration of this entire exercise here? Those are two key questions that need to be answered. So we have to ask ourselves those questions as well. Now, what I will say inside of all of this is that we keep our eyes not just on our own forecast, but on the forecast of others. And there are venerated forecasters out there that have either just walked away from their forecasts, as the OECD did, or they've quickly revised their forecast, as the IMF did, or as the IIF did. And they've gone through various rounds of writing their forecast down. So they started off at global growth of 2.6%. It went down to 1.5%. Then they wrote it down to 0.4%. They now sit at minus 1.5%. That's a lot of revision in a very short period of time. And the bottom line there is really that the forecasting community is in disarray. We have all been very humbled. Nobody saw that this was going to come. Nobody was able to predict this in advance. We are all in reaction mode. And so there are some who have actually said, look, it's not responsible for us to do any forecasting at this point in time. We are simply not going to publish a forecast. Well, we don't have the luxury of doing that because we in Export Development Canada and many other forecasters like us are responsible for giving advice to senior leaders, our own senior leaders who need to take action at this point in time. So we have to go forward with the forecast. And what we have adopted inside of our forecast regimen is we are on notice. We've put everybody on notice that we are in perpetual forecast mode until further notice. Now that sounds like a cop-out. That sounds like, you just don't believe in any of the numbers. And so why should we believe in your numbers if you're having to revise them on a daily basis? There are three good reasons why we need to be in that mode. Number one, the data that are coming out are changing very, very rapidly. I mean, this is such an unprecedented event that every release of data is a shocker. And so the depth that we have actually fallen to is far greater than anybody would have imagined, even when we saw the initial onset of COVID. So that's reason number one. The data are changing very radically. Reason number two is policy announcements. Radical policy announcements are being made. Monetary policy is maxed out right now. Governments are spending money that they don't have, and phenomenal amounts of money at this point. And those announcements are coming out on almost a daily basis. Well, how does one keep track of all of the stimulus efforts that are happening in every country around the world? Well, the only way you can do that is by going into perpetual forecasting mode. So number one, the data are changing. Number two, policy is changing and is very dynamic. And number three, the COVID data itself is changing. Now, typically, we in economics are dealing with data that are delivered anywhere from 30 to 60 days after the event has occurred. So if something happens in April, you don't hear about it until June. And that's an awful long time when we see the rate of change that we're experiencing here in the COVID period. So what does one do about a situation like that? Well, look at the COVID data itself. It's become the greatest leading indicator of economic activity of all of them, because we are getting real-time updates every 20 minutes on COVID occurrences all over the world. So we're paying very close attention to that as well. That's the third element that causes us to be reactive at this point in time. So the data are changing, the policies are changing, and the information on the spread of the virus is available to us in real time. And so those are three great reasons why we're taking the stance that we're taking at the moment. Okay, so let's get to the meat of the presentation here. What do we actually see happening? Well, there are many possibilities for how this might turn out. So this is the general situation here. How might we see this happen? Well, the recovery is being characterized by many by using letters of the alphabet. And the most famous of those is probably the V-shaped recovery. So we go down very sharply and we hit bottom, and very quickly we're right back up to the line. So that would be everybody's preferred outcome here. The V-shaped recovery is really the fastest route back to normal, to where we were before, and we can get on with our lives. But there are others that are out there as well. Sometimes it takes longer for that to actually occur. And this is the classic U-shaped recovery. We have a period on the bottom there where we just don't get back to normal very quickly. And that's a situation where we might see recurrence of the virus that causes prolonged lockdowns. And so we've got to take that one very seriously as well. Well, the next one is the dreaded L-shaped recovery. This is where we don't actually recover. And this is what we actually saw in the aftermath of the global financial crisis. And there are many reasons for that that I don't have time to get into, but that is a possibility. And many are thinking that's what we are going to see, because that's the last kind of recovery that they actually experienced. And we believe the probability of this is very, very low, because unlike the lead up to the global financial crisis, this time around, we did not have a bubble of excess activity all over the world. In fact, we had bubbles in very, very few countries. Unfortunately, Canada is one of those countries. Australia is another one. But most other places on the planet actually had the opposite of a bubble. They had very significant pent-up demand. This was clear in the United States. It was clear in Western Europe. And of course, many nations that they trade with. So we do not expect an L-shaped recovery. That is one key takeaway from this presentation here. Well, are there any other shapes of recoveries we might see? Well, some people are starting to talk about this one here. We get an initial V-shaped recovery, but we get another dip. And this is the now famous W recovery, where we get a second dip. We get a recurrence of virus after we thought we were virus clear. And of course, we have a re-lockdown that causes a dip in activity. Now, why is it a smaller dip? Well, because we've already got the mechanisms in place for going into lockdown. So we're not in a mad scramble like we were first time around. And having those mechanisms into place allows us to be much more efficient about the second round lockdown and about containment. So it's much smaller than before. Well, that's actually one that we have to take seriously. And we've developed a hybrid of that. Our preferred is actually what we are calling the check mark. And there you have it. So it's that green line. We get a partial V, and then we get a line that actually slows, because you have recurrence of virus, but it's not enough to actually lower activity. We continue coming back, but not as quickly as before. And so it takes a little while to get back to previous levels of output, but that's the forecast that we think is the highest probability forecast. So here it is in living color. So let's focus on 2020 at first. Our forecast currently calls for world growth to drop by 3.8%. Now, we're among the most pessimistic global forecasters at this point in time. There's only one that I can think of that's more pessimistic than us, but we are less pessimistic than the IMF, the IIF, or the OECD. Now, developed countries take the lead inside of this. So unfortunately, for those of us who live in the developed world, we are going to see a nastier drop in activity. And you can see that, that we in Canada are almost the most unfortunate. And that's because not only are we a trading nation and we get severely impacted by this, but we're quite dependent on industries like oil and gas and aerospace. And there are a few others that we could throw in there as well, but those are the big ones. And that's what really weighs against our ability to grow or to stem our decline this year. You can see the United States, by contrast, is actually one of the stronger economies and actually is one of the economies that gets out of this more handily. But certainly some countries in Western Europe feeling the pain here. How about emerging markets? Well, they only go down by 2.8%, but against expectations that they were going to grow somewhere between 5 and 6%, this is a nasty shock for them as well. For China to actually decline is unthinkable. For India to actually have an outright decline against potential of somewhere between 7 and 8% growth is also unthinkable. And you can see in parts of Latin America, the same thing occurring. Commodity dependent Africa is in the same boat here. Commodity prices have taken a drubbing. And if you're Nigeria or Angola and are oil dependent, this is very, very bad news for you. Okay, well, there's the bad news. Let's flip over to 2021, and you can see that it's the polar opposite. We see from a 3.8% decline a world economy that is up by 6.2%. And we think that's actually modest. It may be more than that, but that's what our checkmark forecast actually gives to us. You can see that emerging markets are taking the lead, so they spring back more quickly than the rest of the world, and the developed markets, of course, rebounding as well, with the United States actually performing greater than the national or the global average here. So that's the way that we're actually looking at this as a forecast. Look, folks, there is a lot of risk around this. As I've shared with you, there are many ways that this forecast could actually manifest itself going forward. We believe that the outlook that we are taking is the highest probability outlook, but let's face it, there is so much uncertainty around, and much of this depends on, of course, consumer and business psychology. So here I put together a list of strategic considerations. We as leaders, as we see ourselves not just going through this, but coming out the other end of this, when we start to grow again, we have to ask ourselves one fundamental question, and that is, what will change and what don't we think will change? Well, it's important to draw things up in those two columns, because your businesses or the businesses that you are advising will be hanging on your every word here in terms of this. And they, of course, will be putting millions of dollars down on the table in their decisions. And so this is quite fundamental. Let's go through a couple of observations here. First of all, we do believe that the recovery will be aggressive, and we're already seeing that in some of the early data. If you look at China's rebound, boy, some of the recovery data there are phenomenal. They're far beyond what anybody thought they would be. South Korea, same thing. Some of the earlier countries in Western Europe to be hit are showing that as well. Look at Canada. We just released labor force data where in 1 month we created 230,000 jobs. 290,000 jobs. Well, that's somewhere between 10 and 15 times what a good pre-COVID month would have yielded for us here. So we lost a couple of million jobs on the way down. So it's still sort of a drop in the bucket. But that kind of a month is a staggering month compared to our overall history. I mean, that would be a normal month in the United States, which is an economy that's 10 times larger than our own. Well, in the US itself, 2.5 million jobs were created in the month of May. We just got that number last Friday. And of course, the US lost 22 million jobs. So that's a small number for them. But again, for them, that's between 10 and 15 times the amount that they would see in a normal to good month pre-COVID. So we are seeing some phenomenal rebounds. So the recovery is already showing itself to be aggressive, and we as leaders need to be ready for that. We need to be able to accommodate the rapid increase in growth that is happening inside of the economy. We will doubtless see more virtual activity. Look at us right now. We've all become experts in Zoom and Microsoft meetings and Teams and all these different utilities that are out there. Now we know how to use those things. and we're much more comfortable with them, you can bet that there will be far more virtual activity actually occurring. We believe that, and that goes for online sales as well. Retailing is going to be upended by this. We will still see bricks and mortar retailing, but there will be a lot more that's done online. Increased mechanization. Businesses that have been idle, their leaders have not stopped thinking, and they've had their brains whirring away on what their structure could be going forward. There's been a vast amount of technological development, and that technology costs about the same regardless of any country that you are in. It's very unlike labor. Labor is very, very different from one country to the next. Technology is almost the same price. So if somebody wants to get totally technological, well, that's a great leveler. And we could see countries like Canada or countries in Western Europe, the United States itself, bringing production back because it's more economical to do with machines, with artificial intelligence, with robotics, with increased digitization. That is all a possibility now as businesses are thinking about things. So I would expect to see, for the purposes of securing supply chains, more consolidation actually happening, and mechanization is the ticket for that. Price efficiency, however, is still paramount. Globalization happened for a reason, and it was almost purely a price play. As we get more efficient in allocating business across the world, well, it's prices that have really led us to design things that way. And I do believe that a tremendous amount of those global supply chains will persist beyond this. So we're talking about changes that are not seismic changes, but more incremental as we go forward. Capacity pressures will definitely be a factor as we go into the recovery mode. And that will lead us actually to doing things much as we did them before on a number of different fronts. Trade and investment will resume. It is not over. And one of the key drivers of that is that the sources of growth are going to shift far more towards the Chinas, the Southeast Asias, the Indias, the Bangladesh of the world, and at a certain point in time, we are going to see sub-Saharan Africa also pick up in this space. That's a bit more delayed. Well, as the locus of growth changes, that's where we will be feeding demand. And businesses that want to survive and thrive into the future will actually be diversifying to these locations. They'll be producing in these locations. They will have to remain diversified for the purposes of serving demand. This is our best estimate of what's going on, and it's not self-serving. It's not just because I work at Export Development Canada that I say this. It's a reality. It's a truism. It is where trade is shifting. So globalization is still very necessary beyond COVID, and we are taking pains to stress that so that businesses, international plans are not interrupted by this episode, that we don't retreat into our shells and decide we're just going to be domestic businesses. We don't need that international business. Nothing could be further from the truth. And finally, it really all hangs on the shape and the sequence of the recovery. And that's where I want to get a little bit more personal here. Nobody really knows how it is that this is going to end. Nobody knows with any kind of certainty what a forecast is going to yield. We at best are doing educated guesses about this. We have models that help us to deal with this. But really, my express view as a forecaster, it's all I've ever done in my career. Isn't that a sad existence? It is really in the realm of the divine. This is not the kind of stuff that humans do particularly well. We simply cannot see the future. Many have tried, but we know that our forecasts are going to be wrong. But there are forecasts that we know of that are 100% accurate. And that's what I want to finish up talking with you about. We know without a doubt that we are going to have to pay taxes. But on a more sober note, we all know that our lives are finite. At some point in time, we are not going to be on this earth. And if we can forecast that with the kind of accuracy that we can't lend to anything else, then shouldn't that rise to the top of our priority rankings when we are thinking about our lives and what it is that we do? Well, when I was 17 years old, at that tender age, I was brought face to face with my own mortality by a sequence of events that happened in my life. I was not living very responsibly. I was brought up very well by God-fearing Christian parents who were very active in our local church. And I decided that I was going to run away from that. I had no time for it. I thought it was airy-fairy, hocus pocus, not real life, and I was going to forge out and live my life in a way that I thought was more in line with reality. And that very quickly fell apart on me in a very tragic way. In fact, I lost a very dear friend at that time who was embarking on the same kind of journey, and it shook me to the core. And I was forced to reconsider my path. And at the time, I was confronted with the reality of what Jesus Christ had done in coming to this earth, in explaining why he, as a divine being, had come into an earthly body and was living among human beings and demonstrating his divinity by performing miracles that are on the record, could have been disputed at the time. We scoff at them in movies like Life of Brian and so forth, as if the people that were with him at that time were blithering idiots. There's no other way of putting how they have been characterized. But when 5,000 people can sit on a hillside after following him around for 3 days, hungry as they would have been, they didn't bring food with them, and a little boy who has 5 loaves and 2 fishes gives it to him, and he miraculously creates meals that satisfy all 5,000 of those people on that hillside there. How deceived would they be to go around saying that something had happened? They were hungry. They needed something right away. And it's very clear and plain to me that if that had not occurred, there would have been 5,000 grumpy people who would have attested to that at the time. As it happened, there were 5,000 witnesses of that. And there were many, many more miracles that occurred over his lifespan. Well, what did I learn that he came to do? He came to die in my place. I couldn't save myself from the life that I was on, so that I might actually be presentable before God, the divine being, as somebody who had his record wiped out completely. Well, what could be anything that we would want more than that, to be guilt-free before the divine being? I was thunderstruck by that revelation in my life. And that happened many, many years ago. I've had no reason in my life to walk back on what happened to me at that point in time. I don't believe that I chose him. I believe that, God, made things come together to bring me into his fold, to show me himself. And I think with all of this forecasting, with all that we are trying to wrap our minds around, with all the uncertainty of COVID-19, we and others like us are searching for something that has true meaning, that has a true foundation. And what I wanted to challenge everyone that's listening today to consider in this time of turbulence is the claims that are in the Bible, the claims of Christ, and the promises that are made there. That is a true forecast that can be depended on, if anything could, and is also something that gives us the strength to endure a period of time that we are going through at the moment. So I want to thank you all for joining us today. I'm more than happy to answer any questions that you have on the economy or any questions that you have about my faith story that I've shared with you today. I really do appreciate you being with us. And so I'm going to pass it back to Nosa to navigate us through the question and answer period. Thanks again.
Wow, Peter, thanks so much. Just your heartfelt vulnerability to close us. The information was incredible. You gave us the opportunity to really understand what the analysts, the forecasters are saying, but to bring it back to the good news, to bring it back to your story at 17, and how God found and met you where you were at. The hope. Wow, thank you. So throughout the presentation, several of you have submitted some questions that I will soon be asking Peter to answer. Before I go there, I wanted to take a moment to explain more about LeaderImpact. LeaderImpact hosts events like this throughout the year, but also has a growing network of groups that meet regularly throughout the city. Like the event today, the focus is to help leaders grow personally, professionally, and spiritually in a peer environment to use their influence, affluence, skills, and time to make a meaningful difference in their homes, at their work, in their city, and in their world. Impact occurs when a leader's personal, professional, and spiritual life is fully engaged. It's an easy concept to grasp, but it takes a lifetime to master. It doesn't happen by chance. It takes work. A LeaderImpact group will accelerate your growth as a leader. It's done it for me. The groups are about learning, accountability, and challenge. Many on this call are in a LeaderImpact group. Whether you're a seasoned CEO, a young entrepreneur, there's a LeaderImpact group that will be the fit for you. We would like to invite you to participate in a LeaderImpact peer group that meets in our country, in your country, or your city. Following this form, you will receive an email with more information on how you can connect with a LeaderImpact group in your area. As promised, here are a few questions that you all have submitted. So this is from Anonymous. Peter, do you consider the growing global concerns about China, human rights issues, Hong Kong, in your forecasts?
Well, that's a great question. We absolutely do. Something that I didn't share about the work that we do is that I am overseeing a mini ratings agency, sort of like Moody's, Standard & Poor's, and Fitch. And we provide ratings, 7 ratings per country on over 200 countries. That's a service that we provide for our internal transactors at EDC, but we also publish that in something that we call our Country Risk Quarterly. You can have access to that for free. It's on our website, edc.ca. So in terms of the China-Hong Kong situation, absolutely. The 3 of the ratings that we actually provide are political risk ratings. So number 1 is there a situation in the country that is preventing transfer and conversion of currency? Is there something that will cause political violence, and could your assets in country actually be affected by that? And then, of course, is there a situation where, in terms of change of government or change of government attitude, you could have your assets expropriated? So we do this for all countries around the world. There's no reason why we wouldn't do it for Hong Kong and for China inside of the current environment. So that's embodied in the way that we are actually looking at the economies. And so our forecasts are very definitely contingent on what is happening there. So it's an excellent question. Thanks for the opportunity to answer it.
Yeah, thanks so much for a thorough answer. Is the V-shaped recovery in the U.S. a false start? Is this a result of the money subsidy thrusted into the economy? This is from Russ in Vancouver.
It's a great question as well. I wish I knew the answer to the first part of that. Certainly, there is the beginnings of a V-shaped recovery. You can have a situation where you have a very partial recovery. You never, or you don't actually initially get back to previous levels of activity, and it looks very V-shaped. And so I do believe that the US will see a V in their recovery. Is it a false start based on how they have gotten back to work? Well, that remains to be seen. Much of the data that we see on COVID shows us that the population, or the segment of the population that's been most affected by this, are people over the age of 60. Many of the people that are actually returning to work are of a younger demographic. And so if age is really a factor inside of all of this, then there is a chance that even though it's been sort of a sporadic and rapid return to activity, may well see that V continue. We are far more comfortable with a V and then that correction line, that I showed you there, because we do believe that whether it's in the United States or whether it's in Canada or elsewhere, we are actually going to see a partial recurrence or outbreak again, a second wave of outbreak that actually causes us to pull back a little bit. And so we believe that's the core forecast, and that the pure V is something that has a much lower probability attached to it. Now, there's good economic logic to believe that a V could very much occur. There's nothing that's more encouraging to those who are sitting on the sidelines and seeing everybody else rush in. And there are economic dynamics that come into play that are far greater than just psychology that draw more people back into the marketplace. Think about prices. If people are taking their time getting back into the marketplace, well, what's a good way of luring them in? Well, drop your prices. And it's amazing how price sensitive we are, even in the face of a pandemic. If you can, travel to see the Taj Mahal, let's say, and that's what you've always wanted to do in your life, and you can now do it for $999 US as opposed to $5,000 or $10,000 prior to COVID, well, you might just be enticed to do that kind of thing. And that's what often gets forgotten inside of all of this, the price mechanism. There are a few other dynamics as well. So I do believe that the US will see pretty much a V. Now, I can't remember what the second half of that question was. Can you help me there, Nosa?
Yeah, for sure. Can we put that last question back up on the screen, please?
Yeah, my apologies. I just...
oh, no worries. Is this a result of the money subsidy thrusted into the economy?
Again, a good question. It's a very clever thing, actually, to ask a double-edged question, because you get to ask two questions for one. And I don't charge you any more for that either. Yes, subsidies will actually very much be a part of the recovery in the second half of this year. It's been a part of our forecast right from the get-go, and here's why. Monetary policy, or interest rate adjustments that get made, they take at least 6 months to become effective in the economy. You need to have contract rollovers, renewals of mortgages, and all that good stuff happening before you can actually take advantage of lower interest rates. And so that's a lagged effect inside of the economy. And the true effect is really somewhere around 12 to 18 months, according to metrics that the Federal Reserve Board and the Bank of Canada and other central banks have put together. And so once the economy is actually recovered, some of this policy is going to kick in. Now, how about government spending? Well, that's tricky as well, because it's not easy for governments to get money into the hands of people right away. They're doing their level best to put paychecks into people's grubby mitts, so that they can go out there and spend right away. But here's the question. Even if they can get that money to them right away, are people going to spend it right away? I don't think they are. Because there's this other thing we call the permanent income hypothesis. When you actually get, a short injection of capital and you're not sure where the future is going to go, you tend to not spend it. And I think that that's what consumers are going to do. They're going to hold on to as much of that money as they can. And when they're convinced that the economy is actually coming back, that's when they're going to unleash that spending. Well, that's right at the time when everything is coming back. So the stimulus actually ends up stimulating the recovery as opposed to smoothing us through the downturn. Excellent question. What
This
does
is from
real estate
Craig.
look like in the next 12 months in Canada and the US? Sorry, Nosa, I just, for the
No, no
sake of
worries.
speed,
Yeah.
ramrodded over that one here. That's a
No
very
worries.
interesting question because these are two different markets. The United States never had a housing recovery. And so I believe that we were on the threshold of seeing double-digit growth in US housing before this all occurred. Well, that pent-up demand is still there. So when the US economy comes back again, I would not be surprised at all to see the housing starts get back to the 1.4 million unit level, maybe even getting up to 1.5 and 1.6. Now, that's a possibility. That's not our forecast, but 1.4 million definitely there. And that's a very strong level of housing activity in the US. So I don't believe that there's really any fundamental interruption there. Now, Canada is the exact opposite. And I don't have time to get into all the reasons why, but we had a bubble going into this. And so this may be the thing that bursts that bubble, to be quite honest with you. I really don't have high hopes for real estate inside of Canada. And I'm really talking about residential real estate here. If you want to talk about commercial real estate, I'm quite bearish on that actually for both the US and Canada, because if we all revert to doing more, not revert, but if we shift to doing more online shopping, then commercial properties for retail purposes are in real trouble. And so the landlords and the tenants there are going to have to get together and work out some kind of formula. How do we get retailers going back into the places that they occupied prior to COVID? So I would say that that portion of real estate is in a bit of limbo at the moment. Commercial office towers are another issue. If we all start working at home, well, will we need all of that space? Will vacancy rates actually rise? But on the residential side, I think if you're in the United States, you can feel pretty comfortable about that. Not so comfortable in Canada. Great question.
So this is from Matthew. What do you make of Canada's debt level? I hear we are spending upwards of $300 billion to support the economy. Are we at risk of a debt rating downgrade?
Well, that's another excellent question. We're all at risk of a debt rating downgrade because every government around the world is spending like there is no tomorrow. And so the OECD itself is saying, look, we are going to see the average OECD country debt to GDP ratio consolidated. So we're talking federal, provincial, local, put it all together. And in every OECD nation, the average is going to rise from a debt level of 109% of GDP to 139% of GDP. I think I got my numbers right there, but the magnitudes are roughly right. That is an enormous deterioration. Now, let's go back to Canada's history. I'm going to get Canadian for a sec here. Back in 1990, when we were experiencing a recession at that time, our debt to GDP ratio, the beginning debt to GDP ratio was somewhere between 60 and 65%. So that's sustainable. And we quickly were zooming up to 100% of GDP. And that's when ratings agencies said, you are going to lose your AAA. And we actually did. Well, this time around, the United States has a starting point of 105%. The OECD, as I said, has a starting point of 109%. And we're going to see a 20 to 30 percentage point deterioration happening. Well, where does Canada fit into all of that? Well, we're spending a lot of money, but we started in a very privileged position. Our consolidated debt to GDP ratio was somewhere around 80%. So we were 25 percentage points shy of the level in the United States. So if anybody's up for a debt rating downgrade, Canada is going to be pretty close to the back of the line. Which is a good place to be when it comes to downgrades. Others are going to be downgraded ahead of us, I do believe. And so even although we are spending in a very big way, the prudence that we've shown in the past has actually shielded us from the wrath, let's say, of the ratings agencies, more so than in other nations. So are there any other questions? These are great.
We have another one from, these are great questions. We have another one from Lance in South Africa. For many businesses and organizations, reputations are, I couldn't read that, muddled by financial instability and misinformation. What are some of the things business owners should focus on in these times?
Times of desperation are a core test of our character. If we face the loss of a portion of or all of what it is that we have worked in our lives to put together for ourselves and for our families and what have you, when that gets threatened, that really tests what's inside of us. Tests every moral principle that we have used throughout our lifetimes. And that's the point at which it's revealed to us what is really important to us. I've known of business people who have roped themselves into contracts that initially were lucrative, and then the market changed on them, and they were faced with the moral dilemma of whether they should honor those contracts or whether they should walk away from them. And the person I'm thinking about in particular was a man of incredible integrity. And even although he believed, the numbers showed him that he was going to lose his livelihood, he honored his contracts. And as it happened, he was spared the loss of his business, and he held his moral integrity. Well, after he came through all of that, all of the other people in his industry walked away from their contracts, and they downloaded the risk to the holders of those contracts. And some of them didn't survive. They went under and so forth because those business persons went against their word. Well, this one who upheld his word had a very loyal following of customers after that because he had held on. Now, that kind of thing isn't guaranteed for anybody who holds to their principles, but I believe that that's the great test of our time at the moment. Businesses are falling, they're dropping like flies right now. It's very, very hard to keep going. And so I believe it's fundamental that we do not walk away from our integrity at a time like this, with financial misinformation that is going on, with obfuscation of how it is that we are doing or how others are doing. That's not the way through something like this. And our disclosure rules are actually helping us through that increasingly as we go through time. I do believe that there is compassion at this point, broad-based compassion for the circumstances that we are in. And there is a willingness to actually listen when we are in a time of duress and to amicably renegotiate or defer contracts. And I think that that's what we should be thinking about in terms of getting through this downturn. If we're those who are in a position, if we're in a position to be able to grant leniency to those who are out there, then I do believe that at a time like this, one of the great principles that we can adhere to is the principle of compassion and sharing the risk of what it is that is going on. That doesn't sound like good business principles as we go through a time like this, but these are absolutely extraordinary circumstances. And for me personally, it's a set of circumstances where I lean even more heavily on my God. I don't do anything like this or any of the other things that I do in the course of business without bringing them to Him and asking for His advice and guidance and direction through all of this. So I'm hoping that there's something in that response that's useful. Thank you.
Compassion and integrity, that's great. This is going to be the last question. Peter, what are the things in your life that help you grow spiritually and in your profession? Are there people or groups you connect with in both of these areas?
Well, I appreciate that question very much. I think it's a combination of things. I very much believe in personal disciplines. And so for myself, I go through a series, a Bible reading series that takes me through the Bible about 1.5 times over the course of a year. it doesn't really matter how speedily we go through. The importance is to have a daily diet of spiritual food. I find that there is no substitute on earth for prayer. And so when it comes to matters of family or my local church or personal issues or work issues, there's nothing that we cannot bring before our God in prayer. To commit ourselves to him and to seek his guidance. Time and time again, I could fill an entire presentation like this with answers that I've seen to prayers in situations that for me personally were impossible. And you know, in the business world, in family life, in other issues of life. And so I would strongly recommend both of those things. Thirdly, I would say it's fundamental to me to be involved and to be regular in worshiping at my local church. That's a means that God uses to augment our spiritual lives and to keep us fresh and ready and on top of things and ready for those times when we're actually tested, where our integrity in life is tested. And so I'd say that's very important. I would also say that it's incredibly important to have a series of advisors or those to whom you are accountable. And so groups like Leader Impact Group are very, very important to have. And so I've had a group at my work. I certainly got a group of men at church. I'm on the elders board. And so they're a dear group of men, advisors to me, and they occasionally listen to my advice as well. I think those are fundamental parts of life. You know, when I was a kid, I just thought I could go on my own. And even through life, you know, I've had this tendency to be a bit of a lone wolf and so forth. And I've got to fight that because I came across a piece of scriptural advice that said, but encourage one another day after day, as long as it is still called today, lest any of you be hardened by the deceitfulness of sin. That to me was very powerful. It told me I cannot do this on my own. I actually do need the help of others around me. And so that's why the work of Leader Impact Group, they didn't ask me to advertise for them, but that's why it is critical. It's actually a critical part of life that we have this kind of encouragement and building up that we are doing with each other, whether we're men or women. We absolutely need this kind of backstop in our lives. So thanks for giving me the opportunity to share a very, very important life question.
Yeah, thank you, Peter, for your time today. I just want to say, on the behalf of everyone that was involved, we take so much away, and we appreciate you. Thank you, listeners, for joining us for this special Leader Impact event. We look forward to connecting with you in the coming weeks. Like I mentioned earlier, in the times of discomfort, leadership either rises or falls. May we rise. As believers, may we never forget where our hope comes from. Thank you so much. Have a blessed and great day.